Does the jobs number matter right now?
Look, I think that it's a completely fair question. Any given month, we obviously want to get a sort of a broader sense for the pulse of the labor backdrop, and that's what this report provides, right? A broader sense. I think in a micro way, from the claims data, we know that you're roughly back to where you were pre-pandemic, which is saying a lot. Again, we're getting really close to that. But I think for me with this jobs report, I think it probably takes on a little less importance just given Powell's pivot of late, right? I mean, I think it's pretty clear that they're shifting away from worry about the labor backdrop more toward inflation. In fact, I would argue that next week's CPI report is probably more important than this payroll report. But look, we're still looking for about 500,000 jobs. We're looking for the unemployment rate to improve, and all of that is obviously great, and we're moving in the right direction. But I think it's entirely about inflation now, or more about inflation than it has been about labor.
Yeah, right on. I mean, if we get a number, it's 500,000, right? A quote weaker than expected, or 700,000, quote better than expected.
Yeah.
I just don't see it mattering that much. To your point, what matters is how much these workers are being paid and how much that wage inflation, which, by the way, is likely to, if not be permanent, Tom, right? Is you don't give somebody a raise and then cut their pay. I mean, this could be permanent wage inflation, maybe in a good way.
Yeah, Brian, I think you're so spot on. I think what we need to bear in mind is this. I think as the year progresses, right, as 2022 progresses, I do think that some of the heat will come off of the wage pressure that we've seen of late. But, for whatever that's worth, because all the benefit or much of the benefit has already been achieved. Wages are meaningfully higher today than if you created a sort of a pre-pandemic baseline, right? I.e., if the pandemic never happened, you're wildly above what wages would have been today had the pandemic not happened. So I do think some of the heat will come off, but again, I also recognize the labor market is incredibly tight. And just keep in mind, all we're doing in a lot of ways is going back to where we were pre-pandemic, which is to say, some of the tightest labor markets we've seen in a generation, and that sort of kept a more persistent undertone of wage pressure in place. And again, this feeds back into the inflation narrative. We do think that much as we saw right before the pandemic, that it will feed into the sort of putting a floor underneath inflation. Look, we said this many times, as 22 progresses, inflation is going to slow down. I think that is sort of a foregone conclusion. We're not going to remain at these sort of lofty levels. But I do think that you're putting a floor underneath inflation above the Fed's 2% target, and I think that's an idea that people are going to have to start to embrace.
Inflation hasn't run this hot since, 92, when the 10-year note was yielding 8% and mortgages cost 10%. Pretty shocking. Either way, okay, so the jobs number comes in a little hot, a little cold. We move on. Is Omicron what you're watching, Tom? Because in that jobs number is hospitality, and we know this. If things start to, people get nervous, I don't think there'll be lockdowns. The public won't stand for it. But if people get nervous, leisure and hospitality could be the first thing to go.
Yeah, and certainly that would show up, I think, in sort of less hiring there, right? Because even with Delta, we still saw, for the most part, persistent hiring over the course of the last several months in the leisure and hospitality space. I do think that some of the heat can come out of that. I think where Omicron will really show up is how in the distribution of spending, right? So the thing that really punctuated the onset of the pandemic was really people loading up on goods spending, and even as Delta was emerging, we saw a shift again. We thought that we'd be shifting to services spending over that window. We didn't. Instead, we saw people really load up on goods spending. So I think it's sort of that sort of interesting push pull from services to goods spending that will be interesting to watch on Omicron.